Morning. Good morning, everyone. It's Chris from Excel as well as Solstice. You can find us on both website, X, Instagram, as well as Discord. Remember, this video is for the weekly outcome that's coming in, outlook on the stock market, for side market, up market, as well as down market. I wasn't able to do the last 2 weeks of video. I'm making a short one and brief to the point, so pay attention to it. And I hope you like this video. Smash the like button and hit the subscribe on the channel. Let's go to the first slide I have up here. And what I did, I put the website for Excel. You can find us there. There's the disclosure right here. Secondly, I wanted to show you the weekly YouTube video that I put out 2 weeks ago, and this is the third week. You can see technical trading. The bond market is telling us a story about the short-term, mid-term on TNX on the charts, and the rally is lying to us. If everybody paid attention to it, you would not have been caught on the Friday downdraft in the semiconductor as well as the tech sector, because you were able to protect your principal, protect your gains, and get out of the way on the platform. So this is on X, what I posted in the morning. And I want to show you this. Good morning. The overnight inventory is red. The rule apply on Friday. Okay. I put here futures. Unfortunately, I don't know why it did that. Forex, stocks, and options. I posted by typing too quick. I didn't post a pound sign. In crypto on the S&P, Nasdaq, the Russell, and I said pay attention to Bitcoin. It's coming to a bottom in XLK versus IGV, XLE versus the DXY, VIX, and the ZB, the ZN, the 10-year notes, IEI, the 3 to 7 year USO, and crude. TNX move. I might probably said, TNX more than once on the as well as interest rate and SB short for Bitcoin. I posted the combination of the S&P, the Nasdaq, the Russell, and the Dow in the morning pre-market. You can see where we were standing. This was the Wednesday move down. This is the Thursday rally up. Look above. You can see it looked above on the hourly chart. Then in the overnight, we fell down due to the report on the employment. People were worried, and all of a sudden, SpaceX came out about 11 o'clock and caused that tension. And I put as well the sectors that we were watching in relationship to the small cap, where the Russell was on a double top. And I said, in the overnight came in, and I put this marker here, and we fell further down. So I said, happy TGI for everyone. Enjoy your day. And all of a sudden, by 1 o'clock, the market basically closed at the bottom. I want to show you those flips from last week's measured move, expected move. On this look above here, you can see the 200%. On the Thursday look above. Then on Friday, we tried to look inside the range, couldn't hold the 18 simple moving average. We lost the 50, and that weekly high up here, that consolidation and the prior in this week's low, we sliced through it. We sliced through that downtrend, came back to the prior week's range, and we closed way below it on the hourly or the 78-minute on the S&P, Nasdaq, and the Russell. We closed under the 116 simple moving average. We closed, this was the breakout in the prior week. You can see that move up, and that was, between this candle here and here, there was a gap, and we filled it. We looked down to this area and bounced a little bit, but was not able to close on the 116 simple moving average. We're going to pay attention to what Monday offers us on Sunday. Do we come up a little bit and come back down, or do we continue lower towards the 200 SMA and the consolidation of the lows in the prior week? So this is one way to look at it. And I said, oh my God, close the market, just been, giving funny commentary on X. So this is on X, and I showed you the YouTube channel. You can check it out on weekly basis. This video is for free for everyone, and subscribe and hit the like button. Give us your commentary. I have about 42% of you do not subscribe to the channel that watch this video. Please subscribe, it'll help us out. And I try to do not any commercials between the YouTube channels. So let's go now. And I showed you here the combination on the hourly chart, which I showed prior, and you can see that move down. So we're going to grab here and put it on the daily. to show you the levels. Let's go to the daily, and I'm going to remove the Russell out of this pile. Okay, we're going to move the small cap, and I'm going to keep the Dow Jones Industrial Average to show you how far we came down. You can see this move down on the daily candle was very sharp move down on the combination of the three instruments, not including the Russell. And you can see we sliced through that prior 2-week double bottom, the rally up, look above, and eventually fall back down. We lost the 18 SMA on the daily chart. I am paying attention to the 18 as well as the 50. There's a 32 moving average, and this will coincide if we put an oval or a box in this area. I'm going to show you this bottom area first. Okay, this would be way below the 50, but this area here on this consolidation before the breakout would be the first. If we're going to come back down, that would be the first area to pay attention to on that combination of those instruments. I want to leave this here for everyone in case we create a shoulder and come back down, or do we continue lower on Monday. Let's go take a look at the small cap micro 2K, and I want to show you the micro 2K, not just on the daily, but I want to bring it into that hourly chart. Let's do 20 days, 4 hour. You can see that we were consolidating up in this area for a while, trying to get that flag to break out. We looked up on Thursday to that triple top, couldn't clear it. And on Friday, we woke up on the unemployment rate and, as well, we're not talking about tariff, we're talking about SpaceX. People need to move the money out of equity, especially in the semiconductor and the tech sector. They made a lot of money in order to participate in SpaceX by Friday. That's coming out, an IPO. 30% is going to be absorbed by individual investors and consumers, not on the institutional level. So they have to liquidate some of their cash because they don't have enough cash. So we got that move down. We lost the 116 SMA. We lost the 200 SMA. We came on the Russell to the expected move. You can see the 23.8. This is actually 123%. This is 114%. I drew it backwards, and I will show you on the daily how it will look like on the weekly chart first before the daily. You can see the prior year high in 2025 and the low. Instead of drawing 0 to 100, then you get the 123, 114, 127, 138. We can see we hit the 138 up on the top, and we fell down on the weekly. There's your 18 and that consolidation right here. Does it continue to come back to this area or furthermore? So let's go to the daily chart now. Take a look at it one more time. And I wanted to show this on the daily. I'm going to zoom it in. You can see where the daily is. So if I go back to the 4 hour here, what we're going to do, go in the style, I'm going to show you the monkey bars that are available on the charts through TOS, which shows you the time spent in relationship to value high, value low, point of control, or where most volume is, in relationship to distribution. So if you can see, we were overlapping. This is value high, value low, point of control. This is the time spent high, time spent low, and most time in 24 hours between the European, Asian market, as well as, Africa, Canada, US, and South America. So this will collect the 24-hour time spent. We can see that this consolidation here, I'm going to zoom in this area. You can see where the value high is, the value low. This is the shadow. The point of control where most volume happened. At this time on Thursday, the time spent was lower. You can see if I take the high and low, since the time spent was lower, the sentiment was lower. You can see on Wednesday, the time spent was higher. If I take the high and low, it was above the 50, so they dragged it up on Thursday. Then Friday, since the time spent was lower, everything got sold off. But on Friday, the time spent in the European, Asian markets, including the US before the open, we had 4 distribution. This is a canyon. This is the valley. Canyon, valley, canyon, valley. So we had 4 distributions, but the point of control never migrated lower, or the time spent migrated lower. So I am paying attention in case we rally back up and sell off to create a right shoulder, or there's going to be continuation on the small cap. So this is one way to look at it. And I want to go from the monkey bars here. You can see the 10-day, 30-minute. I'm going to go to a daily, and I'm going to show you a 3-month chart on the monkey bars so you kind of understand it. You can see in the prior month, which was in May, this is the June that's developing here. My value high, I marked it. My point of control, I marked it. And I marked the value area low. We opened here and we closed down here. You can see the distribution. We closed right on the 123% of the annual chart. If there's going to be continuation, I will pay for the 14% and the zero line in the prior year's high. Or do we reverse back to create a right shoulder, or do we continue up? So the sentiment has changed on the daily charts. If I look at it from the daily, we're going to go back here and I'm going to bring it down to show you where on an intraday, we're going to go back to a 20-day. We're going to do an hourly chart so everybody can see it, or 2 hours, so you can get an overall view where those levels are. If you can see here, the point of control here was visited and tested. That was a virgin control point. That point of control was never tested when we rallied up. We tested it. We took out 2 points of control, which where most volume happened. Do we find support, or is there going to be continuation going through the monthly value high, point of control coming back to the value low, or reverse back up? So this is very important on small cap. Now let's go back to the regular charts. I'm going to go back to daily. The 10 intraday from monkey bars to standard. You can see those hourly. We're going to bring it back to a daily chart. And on the daily chart, what I'm going to do is go through the semiconductor SMH just to show you how sharp this move down was. In the semiconductor, you can see from the annual high in this was the February high, this was the March low, and we rallied quite a bit sharply from the March low all the way to up here. You can see that this consolidation, when we looked up, we came back, retested this gap, rallied up. And you can see that rally, we sliced through that small gap here. There's another gap here. We sliced through it. We lost the 18 and the uptrend channel. Between the 18 and the 50, there's a 32 SMA or 34 EMA, and the F3, which is the 38.2. Do we come all the way down here to create a right shoulder, or do we reverse create some kind of resistance on the backside of this channel, or lose the 18 or the 20 SMA and fall further down back towards the 50 SMA? That's the SMH. Let's take a look at the XLK. Okay, in XLK, you can see the same thing. I measured this a while back. Let's remove this. This was from the prior month low to high. You can see that prior year high here. We tested it here. You can see there's a gap in this area, the rally. But if I zoom in here, there's quite a bit of gaps in between. There's one here, that's an island reversal. This was retested, broke out. There's another island reversal here. What I'm going to do is mark him with an oval so you can see him, so everybody doesn't say, oh, he's just, calling them out. There's one right here. You can see him, and I can extend them all the way down. And there's one more here. You can see it. It's never been 100% retested. If I take it here, you can see that 100% has never been retested. So you can mark him and go across in case there's an island reversal between the Thursday candle and the Friday candle, because you can see the Wednesday high, the Thursday, and the Friday move down. Do we find some kind of support here, or do we come back to the bottom of F3 between the 18 and the 50, or create some kind of a shoulder, or do we continue lower towards the consolidation and the second gap right here? If I edit this property, if I can extend it, you can see it's 5. If I put it on 6.6, it's going to show me that gap there, and I can move it one day higher here, so everyone can see it. Oops, it didn't do it the way I want. 7, 6. There it is. So everyone can see those gaps. I'm not going to mark this one down here. We do have this one right here. You can see it. I'm just going to leave them on XLK. So let's take a look at now. I want to bring in CME Group. The reason why, because, they think there's a circuit breaker, and you can see in the CME group, that handles the exchange, between the S&P, the Russell, the Nasdaq, the bond market, the futures, the bond, and so on. And the crypto, not just part of the crypto, you can see part of actually the commodity side, and you can see that large sell-off on the coming down and the push up on the weekly chart. So we're going to pay attention to the CME, and I'm going to pay attention to the ZN, which is the bond market on ZN. You can see if the Federal Reserve Board going to do something. We were rallying up trying to get the rates lower, and now the par value of that bond came back down. They probably going to keep interest rates elevated due to the employment that came in stronger than expected, but they got to move money out of the market to buy other stuff. So I'm going to show you, for example, I'm going to start with Tesla. It's not just about Tesla itself, but I wanted to show the technology companies, the AI part of X, AI and so on. You can see on that move here, we were trying to get back to the 450 up here. We tested the 431. You can see it on Wednesday. Tuesday was an inside bar, and eventually on Friday it sold off. We lost the 18, we lost the 116, we tested the 50, didn't even hold it, or the 393, and came to close down in this territory where that consolidation happened before the dump, the rally. Then we had the U-turn, and that was the cup and handle, the move up, and now we zigzagged and coming back down here. So we got to pay attention to Friday, what the sentiment is in the overall market. If you take a look at the MU, I'm just going to bring in a couple of them, sorry. You can see it's in the same situation, or if I bring it on the hourly chart, that would be a little bit more better for everyone. We can show it on a 10-day, 78-minute, and I wanted to show you how sharp, between this area and this area, there's a tiny little gap. The dump, then there's a gap between here and the open on Friday and the push lower. So that's in EMU. You can take a look at ARM and AVGO. You can see what's happening here. They are selling, and they have lost the 200 SMA. And let's take a look at AVGO, which is Broadcom, and you can see the same situation after the earning report. They tried to wick it up. There was some kind of a trade in the overnight that had a high wick. They tried to rally, couldn't make it. It consolidated, lost the 400, and eventually fell down to that area, which I have the gap probably on that charts on the daily. So more importantly, even if you take a look at AAPL or Amazon, let's take a look at AAPL. You can see AAPL, Apple was holding very well, then eventually sold off. I'm going to show you Amazon, but I'm going to talk about Google, okay, and IGV. You can see Amazon was selling off in the last couple of days. It tried to rally it and eventually lost the Wednesday's low. So that's something to pay attention to. And I'm going to bring in Google, not Google, just going to bring in Google. And I'm going to go S&P and show you how to do the measured move. You can see in Google, after that sell-off fell down, we rallied on Thursday, but Google did not lose the Tuesday or Wednesday low or the Monday low. I'm going to be paying attention to this in case there's a momentum shift back to the upside. That would maybe be a better play compared to a lot of the other companies. And you can see that gap reversal filled a portion of it. I'm going to activate it. Okay, everyone. Going to grab this activation. We're going to bring it here, and we're going to do it this way. So you can see there's still a small gap in that territory we have to pay attention to in Google, and there's the other 2-3 islands at the bottom. So that's in Google. Let's go take a look at the S&P 500. I'm going to talk about SPY, and I'm going to bring it down to simplicity. You can see these island reversal from the February, January high, the bottom in March. And I did not move the measured move or the volume profile monkey bars on it. We're going to remove these, and we're going to mark them with a different marker. I'm going to remove these totally out of here. Okay, everyone? So we don't have any markings. And I'm going to talk about the levels as an overall general idea. This linear regression channel is coming from way back in 2021. You can see it in 2018, and we basically gapped up here, rallied, created a shoulder. This is the head of it. Is there going to be some kind of support or fill the gap coming to the 50 SMA and the 32 SMA, or do we create a smaller shoulder in order to continue lower and meeting the F3 eventually in this area where the consolidation happened on that island reversal? The rally tested the island, filled the gap, rallied up. We have this island down here, which I'm going to mark. You can see it. We can mark it to here, or this one here. We can extend it to the right so everyone can see it. And we're going to put it on 6.6. And I will show you how to do the measured move on this one. So from here, I'm going to go to the monkey bars. We can do 4 hour, 20 days. You can see the weekly high to the low. So what we're going to do, go get the measuring tool from high to low and see where the expected, these are not Fibonacci, they are round numbers to make it easier for us. Edit the property. You can see the extensions. I have 100 minus to the bottom and 200 to the top. I'm going to make them to cyan or cyan and extend them to the left, and we're going to put them back on 5.2. Okay, so everyone can see the levels on the weekly chart. So from the daily, now we're going to go back to the daily so everyone can see these levels on the chart without saying, hey, this is a bias. You can see the 25 and the 23% meets down here if you use a Fibonacci. And if I look at the zero line on the expected move, you can see where it is in relationship if we end up losing that area here of consolidation and coming back down that way. Let's go back to the charts like I had it before, or the 30-day. You can see where that island reversal is. This going to act as support, or are we going to continue lose the 116 SMA, eventually come between the 116 and the 200? There's a midpoint, or that matches that 25% or the 23%. I am expecting a 714 eventually coming to here. And even if I go back up in this area, I'm looking at the 741 area. And if I use a Fibonacci numbers, I want to or show you a measured move, expected measured move. If I do this like this, you can see that way they match these numbers. You can see the 41, 42 coming in on an expected measured move to the downside or upside. And what I'll do, I'll mark them, edit the property. I'm going to mark them with a red color so everyone can see them. Let's edit the property. We're going to make it bright red. And I'm going to extend them to the left a little bit. So we're going to go 5, 5, 5. And push OK. And you can see, oh, it didn't extend them to the right. Okay, I have to put the extensions to the right. My fault. Show to the right. Push OK. Oh, they don't want to. Okay, hold on. Extend to the right. Extend on the right. Extension. There's the extensions on. Okay, push it. Okay, there we go. So you can see the levels between in relationship to the 100% where the 50 is, where the 150 or percent is, and you can use the 38% and the 20% if we come back up and fall down, or do we continue lower towards the 23% and eventually the 114 area. This is an area of consolidation. You can see coming down, rallying up, coming down, and continuing. Let's now do the S&P 500 and the Nasdaq micro ES, and I'm going to do the expected measured move on it. We can take the high to the low for the week, extend it to the left, and edit the property. You can see this. These are numbers, which will give us a better idea where those levels are. And we can create the color, just one color, so that way you know where the measurements are in relationship to that gap. And you can see where the 25% and that virgin control point. There was a couple more up there, but we lost them. We do have a VPOC higher on the S&P 500. Let's do the micro ES, micro NQ. And you can see the micro NQ, we were wedging here, and eventually we lost that wedge and fell further down, and we sharply came back to this consolidation here. If I go back on the annual charts, okay, I'm going to go back to the annual charts. I want to show you something that happened in the prior. Remember when J. Powell came in here regarding interest rates and the tariff, and we rallied, we double topped, and eventually in 2026 after March low, we rallied and cleared that level. We never looked back. If this is considered the same way in what they're going to do in interest rates, I'm going to be paying attention to these levels on the chart on the Nasdaq 100 or the S&P. Let's go back here to 30-day, 4-hour. Do we continue lower to get to the 200 SMA? Do we find support in this area here? If we gap down and come to this area here and eventually U-turn, that would be better. But I do not want to be short in the hole when the market opens on Sunday or Monday at the bottom. I'm going to look for opportunity for a small reversal to create some kind of a shoulder for continuation lower. The Nasdaq looks a little bit more deeper than the S&P 500, and you can see this wedge is no longer valid. This wedge is no longer valid. We can take it out, remove the drawing. You have this one. I'm going to keep this, and I'm going to keep this. This one's no longer. That was the sharp reversal back from the bottom in April. So let's go to the micro ES one more time, and we can see where those levels are. You can see that shoulder, the head of it. Does it create a shoulder, or do we fall back to this consolidation? I hope this video was very helpful. If you have questions, once again, check us out at solstice or axleatrai.com, and this is our contact number right up here on the charts. Take care, over and out. Enjoy your weekend.